So I want you to see what our analysis looks like, but let's take a look first at what analysis looks like if there were none of our annotations and without our cycle analysis. Well, what this has is the slim ribbon, which I can describe to you very quickly as a 3 different moving averages in here. And this is available for free for several different platforms. If you want more information, write team@askSlim.com. So you can get this to put on the Thinkorswim platform or some others. Then on the bottom is a proprietary indicator, which is the Slim Ribbon PO, which gives you a sense for momentum and changes in momentum or continuations in momentum. As you can see in here where the market was going down, you were getting those continuation signals and it was red. Here when the market was going up, it gave you a continuation symbol. And here when the market is rallying, this is still red and about to give a continuation signal on the downside, I believe. So this is without our annotation, so wanted you to see that. But now I'm going to bring in the annotations that we show to our members. And of course, you could get this by becoming a level 1 member or higher. Anybody who's a premium member has access to some version of our charts. So you can see in here now the energetic motions of this movement in here are now visible, and we show this analysis. Here on the bottom, you can see the cycle brackets, and these are a drawing tool, and we just use these to understand money flow that's going on. And when you get negative cycles, and this is the actual cycle here, this is the ideal cycle, and you can see the bottom here in that yellow area is where the downside risk is. You could see that here and here and here. This is the money flows out. And if the market was in good shape, the configurations on these would be higher highs and higher bottoms. When the market is in bad shape and there's negative energy, it's lower highs and lower bottoms, as you can see right in here. So now I'm going to zoom in right at this point, and you can see these last couple of cycles in here. And we talked about this one right here, where it really would not decline and how that was positive. And even though we had looked for it to get into the buy zone over here, and people would write to me, "Hey, Slim, you said it's going down there," and I was waiting there to buy it. But well, it was too strong, and you can see the slim ribbon strengthen here as it kept widening out to this area, and the slim ribbon PO with the positive signal, and then things began to change. You got the break, you got the failure in the sell zone right over here, which was perfect, and then moving down. We thought that this minor cycle would bottom and we would get a rally from the end of last week or early this week into this area of resistance, which is the sell zone. And you can see the market right now with the S&Ps up 56, actually getting into that lower portion of it right over here. So this level right over here was about 40.52. This level here is 41.04. So that would really be the area that I would think would be consistent with the market turning down again, because we have this big area of risk where this yellow oval is. And again, because this is negative right over here, negatively configured, and this is called a left-hand translation, where this cycle peaked way on the left side with all this time left to fall, it says that the highest probability is it will fail in here. You know, there are things do change, and when I say highest probability, I would make it 70-80%, but that leaves 20-30% where it would get above this level right over here, 41.55, and then make us look real hard at what's going on. But we think that is a very low probability. Then what comes into play is the failure in this area, which should come sometime next week, and then the market moving down. So the question is it going to test this area of 36.36, which was that last low in June, or will it get support around that last low, or there's some support in the middle over here, so in the 3700s. That's, in my opinion, falling back underneath this cycle low right over there is practically a given. That's 38.86. I think that's very, very likely. And potentially getting down to that last low 36.36 before this is over with over here. So we're in a period where it should be rallying, and it is rallying. It's getting into resistance, and it will peak somewhere in here, probably right in this area right over here. And then when the sellers come in again, this is a very dangerous time frame. Now, it could get under 36.36, or it could just pull back to this last low over here. We don't really know. We just know that this is a period of risk, and that in this period there is a high probability that it will be moving down again, and down potentially in a very serious way, just as you saw in these last few cycles right over here, where there was that big decline after that failure. Right over there, you see the minor cycle rally in here, and then it ended in resistance and then had a big sell-off. That big sell-off is due right over here, and this is not a time to be buying the market. There's likely to be a better time coming up to buy the market, and that would be sometime probably out in the late September to early October time period. You see this vertical line right over here and this vertical line right over here. These are time cycle lines, and the low is due to come somewhere in the middle. The ideal low is right over here, right near the end of September, September 27th, 28th. Looks like the time frame for the end of the next downside move. Again, it could be mild and only take out this last low that was right around 38.86, or it could be much more severe and take out way down there below that 36.36 level. We don't know. All we know is that is a period of risk and likely to give you a very large decline.